Independent Lives Factsheet 1.2 Preparing Your Employer Budget. Throughout this factsheet, the following abbreviations will be used: PA for Personal Assistant and DP for Direct Payment. Page 1, Introduction. Once your support plan is complete and you have planned how you will spend your direct payment, you will need an employer budget to make sure that your planned costs are affordable and sustainable. This factsheet will guide you through the process of drawing up a workable and affordable employer budget to suit your specific circumstances. Section 1. Preparing your employer budget. There are a number of things to consider when preparing your budget and spending your DP. You must stay within your planned budget and make sure that your invoices, bills, are paid in full and on time. When you spend money from your DP, it must relate to an agreed outcome in your support plan. Carefully managing your budget allows you to ensure that your spending is affordable and sustainable. You should check regularly that your budget is still an accurate reflection of how you are spending your DP. If you are paying an assessed contribution, you must continue to pay this into your DP account or you will be short of funds. Page 2. Section 2. What should I include in my employer budget? Section 2.1. Introduction. Your employer budget must include all money coming into your DP account. This is the weekly value of your DP plus any assessed contribution that you make, and all money going out of your DP account. Outgoings will include 1. Non-wage costs, for example, employer's liability insurance, payroll service, recruitment fund, PA expenses, stationery costs. 2. Wage-related expenses, on costs. These are the invisible costs involved in employing PAs. So, for example, holiday pay, pensions, employer's national insurance, sick pay, and maternity or paternity pay. You will need to save money for each of these things. You can do this by budgeting for 62.3 weeks per year for wages rather than just 52 weeks. 3. Wages. All money left after budgeting for the costs above can be used to pay PA wages. The number of hours you can afford to employ your PA for depends on the wages you pay them. You must pay your PA at least the national minimum wage. After all of this, you may have a surplus. You can allow this to accrue in case you have to buy agency care in an emergency. Page 3. Section 2.2 Non-wage costs. There are many different types of non-wage costs for DP employers. Some of the most common non-wage costs are A. Employer's liability insurance. All employers in the UK must have employer's liability insurance, and so you must budget for this. This insurance will provide compensation and costs if any of your PAs injure themselves or somebody else whilst working for you. You may also wish to budget for other types of insurance, including public liability insurance, although this is not essential. For more information on insurance, please see Employers' liability insurance, Factsheet 1.3. B. Emergency cover. You might need emergency cover when your PA is unable to come to work, so for example, when they are sick, and so you will need to account for this in your budget. C. Payroll. You may choose to purchase a payroll service to manage the financial side of employing PAs for you. A payroll service will correspond with HM Revenue and Customs for PAYE purposes. Calculate your PA's wages every 4 weeks, comply with statutory requirements including statutory sick pay, maternity pay and student loans, and provide pay slips and summary information for you to pay your PAs and HMRC. For more information on payroll options, please see Payroll Options, Factsheet 1.4. D. PA training costs. Your PAs may require specific training before they can work for you. If this is the case, and it is agreed in your support plan, you must budget for these training costs. Page 4. E. Recruitment costs. It can be expensive to recruit a new PA, and you might have to do so at short notice. As such, it is useful to put some money aside each week to plan for this. F. PA expenses and mileage. Although you do not need to reimburse your PAs for the cost of their travel to work, you do need to reimburse them for travel costs that they incur during the course of working for you. So for example, driving you to the supermarket. 2.3. Wage-related expenses or on-costs. It is essential that you leave money aside for holiday pay, 6.3 weeks at normal hourly rate. This includes 0.7 for cover. Pensions, up to 3% of PA earnings above £192 per week. Statutory sick pay, £89.35 in 2017-2018 tax year. Statutory maternity pay, 90% of earnings for the first 6 weeks, and then the lower of £140.98 per week, or 90% of earnings for up to 33 weeks after that. Employers' national insurance contributions, 13.8% of earnings above £157 per week. In order to cover these costs, you will need to budget for 62.3 weeks of employment per year instead of 52 weeks. The additional 10.3 weeks is made up of 5.6 weeks for the PA's paid holiday, 0.7 for cover PA's holiday, and 4 weeks to cover the SSP, SMP and national insurance contributions. Please contact your social worker if you think you need extra funding to pay pension contributions. If you have a larger DP package, you may need to budget for more than this. Please speak to an independent lives advisor for more information. A. Holiday pay. Your PAs are legally entitled to 5.6 weeks paid holiday per year, including statutory bank holidays. When you first start employing PAs, you will not have a large surplus in your DP account, and therefore we recommend that you state in the PA's employment contract that no paid holiday can be taken in the first 3 months of employment. Page 5. B. Pensions. Some of the costs of the pension will be deducted from the employee's wages, but the employer will also have to pay towards the pension. This is a new cost for employers who do not already provide a pension scheme. The amount that has to be paid towards a pension will increase between now and October 2018 to give employers a chance to adjust their budgets. The table below shows what percentage of wages must be paid into a pension scheme if an employee is automatically enrolled or chooses to join. Before October 2017. The minimum contribution as a percentage of employee's wage is 2% with 1% paid by the employer. October 2017 to September 2018. The minimum contribution as a percentage of employee's wage is 5% with 2% paid by the employer. And from September 2018 onwards, the minimum contribution as a percentage of an employee's wage is 8% with 3% of this paid by the employer. C. National insurance, statutory sick pay and statutory maternity pay. PAYE, pay as you earn, is a system that HMRC use to collect income tax and national insurance from your PA's wages. These are deducted automatically and therefore you do not need to budget for these costs. However, you must budget for employers' national insurance contributions. For the tax year 2017 to 2018, this is 13.8% of earnings above £157 per week. If your employee earns above the lower earnings limit of £113 per week in the tax year 2017 to 2018, they will be eligible for both statutory sick pay and statutory maternity pay, and you should budget for this. Section 2.4. Calculating how much you have for PA wages. Please note, all figures in the example are invented and may not represent the true costs of the services included. This example budget may not include all the costs that you need to include in your particular employer budget. If you wish, you can use Employer Budget Template 1.2 to help you with your budget. Page 6. Example DP Employer Budget. Step 1. Calculate your weekly incoming total, for example, your direct payment plus any assessed contribution. Multiply this weekly total by 52 to get your annual incoming total. Step 2. Calculate all your non-wage costs, for example, payroll per week, to get your total non-wage costs per week. Multiply this weekly total by 52 to get your total non-wage costs per year. Step 3. Subtract your total non-wage costs per week from your annual incoming total. This is the amount available for wages per year. Step 4. To work out the amount available for wages per week, divide the amount available for wages per year by 62.3. And step 5. Divide the amount available for wages per week by the hourly rate you intend to pay your PA to get the amount of PA hours available per week. Page 7. This fact sheet has been produced by Independent Lives for use within its advice and support services. We aim to ensure the information is as up-to-date and accurate as possible, but do be aware some of the content is subject to change. If you would like further advice on this topic, or to access to any of the fact sheets or support sheets referred to in this document, please visit www.independentlives.org or call us on 08 456 01 2399. This is fact sheet number 1.2 and the version is the 13th of April 2017.